CNBC didn't say one word about this. They're not willing to hold these guys to account.
If you haven't heard it, I'd love to know what lovely rock you've been living on, because it's a happy place where we don't worry about stuff like that.
People see it as a bug of the system, but I think it's actually a feature of the system because, with a commodity, if demand goes up, you have a supply response, and you don't have that in Bitcoin.
In the United States, you're beginning to see evidence. If you look at home building stocks, they are very clearly rolling over in a way that is very similar to what transpired in the fourth quarter of 2018.
Frankly, commodity producers have been very good at delivering supply and not great at at delivering returns for their investors.
So the central banks are protecting their own balance sheets against loss of purchasing power. The public is not in that mindset yet.
To me, what those people need, and I think people are starting to get this, what they need is consistency. It's about consistently knocking out that return every year so that you can draw the money out of your portfolio that you need without worrying about running out of money.
And you're now in a situation where we have these problems, magnified to the point that there's not Lehman 2, it's Lehman squared.
Gas prices in Europe are up 60% in 3 days. This is perfectly set up for a quad 3 stagflation that's really going to hurt.
When you run a 24/7 news organization, you're not selling news. You're selling opinions, you're selling messages, you're selling narratives. And that's what CNBC is.